The Department of Government Efficiency token had been quite the rage just 2 weeks ago. Now it's getting somewhat silent. What's going on here? Why did the price depress? Who sold there? And does it still make sense to buy right now? Let's have a look at some on-chain data most people aren't considering. Let's dive deeper into the details. Because that's the mistake I see many people do. Most people just look at price data. Most people just draw random lines on price charts. But there's way more behind this, right? With on-chain analytics, with the things that are actually going on-chain, we can figure out what's driving the price action. Now we are currently at 27 cents. And we went down from the all-time high by 46%. Have we seen the floor? Are we starting our recovery? Who is buying here? Now, I made a video on this token not so long ago. It was published 18 days ago. It outperformed the average video by 80%. And the continuous search volume shows us that there's still interest in the token. Now, there are some red flags here when we compare, for example, the social metrics to the on-chain metrics. Yes, this is a token that's native to Elon Musk and to the X platform, right? X is owned by Elon Musk. And so there is some kind of expectation that there are a lot of followers. That being said, we've got 95,000 followers on Twitter, 13,000 members in the Telegram chat, but only 26,000 holders on chain. Does it really make sense that there's almost 4 times more Twitter followers than people that actually bought the token? I don't think so, right? Most of the time what we see is, of course, more holders on chain than followers on Twitter. Not so here. Apparently, the token is relatively well distributed. There aren't too many wallets that hold 10, 20, 30% of the supply. We even have 2% of the supply sent to a debt wallet. Now let's have a look at long-term, the number of retail investors versus whale investors. And the way we make this distinction is with minimum holding thresholds. So on the left side, we've got the number of wallets that have at least 3,000 DOGE tokens. So at the current price, that's a bit under $1,000. For the chart in the middle, that's 30,000 tokens or $10,000 worth of the token. And on the right, it's another 10x. So that's 300,000 tokens or $100,000 worth of the token. We do see quite constant accumulation by small retail and medium-sized retail. We see holding by the big whales. So the number of whales did not necessarily go down in the last weeks. At the same time, we can clearly see the waves of attention for the token. Whenever there's some news around the Department of Government Efficiency, the token tends to heat up as well. So of course, there was a wave when the token launched, then a secondary wave at the beginning of September. And so the number of buyers and sellers fluctuates. We've seen the largest amount of buyers and sellers on the 13th of November. And that's also very close to where the price spiked. The absolute price spike was one day afterwards, 2 o'clock at the 14th of November. But yeah, it shows very nicely how there is a correlation between attention and price action. Whenever attention is low, the price tends to bottom. Whenever attention is high, it tends to peak. Now, what happened in the last month? The price, of course, went up by more than 500%. But how did those holder numbers change? Here we've got the same kind of holding thresholds, but only for the last month. And the number of retail investors doubled in the first half of the month. The number of medium-sized wallets grew by roughly 30%, and the number of whales stayed stable. And again, we can see how all of the price appreciation happened in the first half of the month. If there is no growth, so when the number of retail investors is just flat, what tends to happen is that the price rather deflates. Not necessarily in the last few days, but overall, we need to see growth of the overall investor base for the price to go up. When we look at the last month in terms of new versus returning users, or let's say wallets that traded the token, again, we can see our peak on the 13th of November. The ratio of new users versus returning users didn't really change that much over time. And so what does this tell us? It tells us again that the majority of people that trade crypto tend to lose, right? If you're part of that majority that bought on this very active day, you're probably now in the minus. If you bought before that, you are in the profit. You don't want to buy when attention is the highest. You want to buy when attention is rather low. And I'm not sure if attention is already at rock bottom. If we continue to deflate for a bit longer, maybe for another week or two, then the price is likely going to come down as well. This data is really useful, right? right? It seems like those kinds of waves are somewhat predictable, and it looks like overall this trend is still down. Despite having seen a bit more attention in the last 3 days, it doesn't look like this is still sustainable. And all of this data is very reliable because the price discovery still happens on chain. So have a look at this table. Most trading volume still happens directly on Uniswap. Yes, the token can be bought on Gate.io and on MEXC as well, but that's not where the majority of trading volume happens. Most buyers and sellers directly transfer on chain. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart. So it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor Protocol went bust. This is when UST depegged. The market as a whole shrunk. Money was flowing out of crypto. And this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again, and that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto, and that, of course, means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term, though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual Protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got CryptoGains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is CryptoGains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by CryptoGains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They're over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstrade.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. And so does it make sense to buy the Department of Government Efficiency token right now? I am not so sure. It seems like we are still somewhat elevated in attention. The attention tends to slow down, and there is a link between price and attention. Once the price doesn't go down anymore and the trading volume doesn't go down anymore, and we see some kind of a floor, that's the point in time to buy, right? It's to buy when nobody else is looking. You don't want to buy when everybody gets hyped up about a token. You want to buy when there's nobody interested in a token, and then hope that at some point in time there will be another news event about the Department of Government Efficiency that then generates all of those eyeballs again on the token that pushes up the price. So I don't have a crystal ball either, but I believe it might make sense to wait for another week or two and then potentially buy lower and then wait for that news event and then sell whenever all of those people buy and sell again, right? Whenever the trading volume spikes up again. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.